What's up, everybody? So today I'm going to be doing a video about how I use the Dow, going over the exact settings I use to trade the Dow, and how I kind of just use a combination of multiple indicators by QuantVue in conjunction with one another, along with drawing my own kind of levels and stuff. So let's go ahead and jump to the charts here and jump right into this one. So first thing that I'm going to do is I'm going to go ahead and take a moment and just show you all the indicators that I have up on the screen. And I'm going to let people just pause and, take the settings in so you can copy the settings for yourself. But the first one that I'm using is QWave. And then the next one I'm using is just the smart money concept one. These are the settings for that. And then I use the money cue ball. These are the settings that I'm using for the cue ball on YM. I use QuantVue momentum. These are the settings that I use for the QuantVue momentum. So the Rinko, I'm using a box size of 5, and I'm using traditional on the first chart. There's 3 charts here. The second chart, I'm using just traditional candlesticks on a 1 minute, but I'm only using that for the QuantVue momentum indicator. So I don't care about seeing the chart. As you can see, I just care about seeing the momentum on that. The last thing I have on the bottom is just a 15-minute chart. Now, we will start with the 15-minute chart on the bottom. I'm going to go ahead and make that full screen. And so you can see that I have green levels and white levels kind of drawn out. And it's pretty simple. The green levels are 4-hour zones. So I'll go ahead and switch over to a 4-hour so you can see kind of the idea behind why these levels are marked out. The 4-hour zone here, this green level here, is because it was respected here, right? It was a previous level of support. It kind of wicked into it on a day, but it's been respected twice, and it was also a consolidation on it over here. So this is like a pretty well-defined zone. The 1 hour is the white zones, just different levels that I have marked from previous price action. And you can see like down here, I have green zones. Like this is on a 4-hour, right? That was hit 3 separate times already, all the way back in March. You can see that I have green zones marked from all the way back from November of last year, another one from October of last year. And I've actually taken some off just to try to make this not as cluttery, a little bit easier to see. Just for this video, I'm going to have to add some of them back. But again, I just think that when you're trading the Dow, zones get respected so much on the 4-hour and the 1 hour that you have to draw these out. You have to know where they are. And really, the past couple weeks here is a perfect example of this 4-hour zone just being touched here, coming back down, coming back up, being touched again here, coming back down off of it, going back into it, bouncing again, being touched again. So this 4-hour zone is a huge key level. It was a support level, and now it's flipped and it's become a resistance level. This is very common, I think, with like 4-hour zones that you mark out. And so what I do is I like to run this on a 15-minute when I'm actually trading in conjunction with it. So I'm going to do Alt Enter, which gets me back to all 3 of them. I make this pretty small on the bottom here. All I want to see is if we're coming into a zone. I don't care about the exact level of the zone, right? I don't care if it's like, oh, perfectly to the tick. All I need to know is I need to look at this. Are we trading up to this level? And what is this level roughly at? And are we going to potentially reject off of it? That's all you need to know. So I make it relatively small. It's just like a potential pivot point, let's say, in the Dow. So I'm going to try to make this as brief as possible. Here we have the Rinko chart. These yellow lines on the chart are simply the overnight highs and the overnight lows. These are very respected areas, especially in YM. Going into a trading day, if there is high impact news, a lot of times I'm not trading it. Most of the times I'm not trading it unless I see a specific reason to. Now, if we were coming down to this overnight low and rejecting off of it, I potentially would take that long. But when we're just chopping through it back and forth, and we're getting narrower and narrower, this is just consolidation before the Fed speaks. Just not a good idea to trade. Now, when the Fed speaks, if I was to take this long, I'd be taking this long on the Q wave bull signal. Now, not just because there's a bull signal, because we also have the money ball as confluence. We also have confluence on the QuantVue momentum. I use the QuantVue momentum only for entries. I do not use it for exits. There's a couple different reasons for that. And then on the 15-minute down here, we have nothing. That tells me that we're going to go up. But based on we have 3 confluences, I'm going to take this bull signal. The other thing is that the 4th confluence would also be that this is a double bottom here. So going into the Fed talking, we just formed a double bottom. But what am I going to be looking at? I'm going to be looking at this overnight low. This is thinking that, hey, we could potentially reject on this. I would be trading 2 contracts on this. And what would happen is I would jump in this trade right there, right? So not a lot of profit till this yellow line. I'd be writing it to here. I would take one off and move my other one to break even, and I would get stopped out on my second contract at break even. It's okay. This is actually what happened to me. It's okay to get stopped out and it ripped higher. I'm okay with that. I would rather take my profit because we did have this rejection off this level here. Now, and the other thing is, if you did stay in it, a point or how you kind of know it's being exhausted is, again, I don't always use the momentum, but here you can see that we're kind of in this range of should be getting potentially exhausted on the momentum. But then in conjunction with the momentum, you're seeing it not break out of the top band anymore. You see it go back in and just fail to break. So this gives me the idea that's also going to potentially roll over. The other thing is that if you look at the overnight session right here, this was a area where we tried to make a support and we failed, meaning that there was strong sellers at this area. And so this is something to take into consideration, that this is already a likelihood level of kind of turning the other way. Now, once we turn the other way here, we see a flip on the money ball. We're seeing this bear signal come in, and we're also seeing this dot on the momentum. Again, I'm using the dot on the momentum to potentially take the trade. The dot on the momentum shows up before the Q wave bear. We get the Q wave bear signal. I'm going to take this, but I'm going to be conscious of this lower level as a potential bounce area. We don't have a bounce. We rip through it, which is great. And notice how we are staying outside that band the whole time we come down. Once we kind of bounce here and we kind of come back up, there is a good chance that if I was trading this, I would take off a contract potentially here, or at least bring my my stop for this contract to this top or this middle band. If you brought it to the middle band, you would have been stopped out, and you might have been able to capture a little bit more profit. But as you can see, coming down into here, if you continue to move your stop on that first contract, you would get stopped out right about here. Again, this is also depends on if you're inside of an evaluation or if you're in a funded account that has already built up like a little bit of a buffer. You trade differently. Yeah, again, if you still have your trailing drawdown, you want to capture your profit and don't let it come back on you as much. Once you take off that first contract, you want to move your other contracts to break even. Now, this thing that I would be looking at here is going to be looking at this green line here. This is the 4-hour mark here, the 4-hour support level, resistance levels in the previous, I think this one's from June. It says June 6th here. I don't know if that date's actually right, but it's from June. I would be looking to potentially, especially get out of my shorts, but looking at this as a high probability of bouncing and going in the other direction. So much so, I trust 4-hour zones as support zones so much that, especially intraday, that this is going to be a very high probability play. I'm not going to wait for a bull signal to pop up off a 4-hour support level or a 4-hour resistance level. I'm just going to go ahead and take the trade. And if I'm wrong, I'm wrong. But the nice thing is about taking it on a 4-hour support or resistance level is that you're going to make your stop really tight, because it's either you're right or you're wrong. I would say 20 points should be your max stop, and then your target here, I would be targeting the overnight low, which is exactly where we came up to. This is exactly why I tell people you have to mark your overnight lows and overnight highs on the Dow. It is so important. And that is a beautiful trade. That is almost a 10 profit factor with giving it 20 points to move. This is a great trade. And that's a trade that I was actually able to capitalize on. It was wonderful. So here, we're just going to go, I'm going to try to go through some of these days just so you can see how I have traded and how I do trade. Going into this day, are you going to trade the chop? No. Why? High impact news. You have jolts coming out. What happens as when jolts hits? Oh, we get a Q wave bear signal. Where are we going to trade the Q wave bear signal to? We're going to trade it back to the overnight low. You can see here that we actually had not a we had a rip through the overnight low, which is great. Now, what happens when we hit that overnight low? We're going to be taking one contract off, and we're going to be moving the other contract to break even. Then what happens? We come back up to the overnight low and reject off of it. You can see right away that these overnight lows and overnight highs are super important in the Dow. You have to pay attention to them. Now, what's going to, there's other confluences here other than just jolts and it turning directions. You get the Q wave bear. You have it showing up on momentum. You can see right here, right? And we're already in this top area zone. So probably a high probability that it's going to go lower. The other thing that we have going for it is the money ball hits too. So just a great trade. Now, how do we know when to get out of this second contract here? Honestly, I probably wouldn't be looking at it. I use the money ball a lot. Now, keep in mind, I told you that I don't use the momentum to get me out of my trades, but I am paying attention to it. Once we come down to the zone on the momentum, you can see that we're forming green and red dots here. Now, this is just telling me that it's not as strong of a push anymore. Doesn't mean that it's going to stop trading in that direction. The other thing is that when we ripped through this zone here, we ripped through that 4-hour zone, which was this zone here. So now we're in this no support zone, and we're going to have to try to figure out when to get out. Now, here's the thing. You've already taken one contract off, your other contracts break even, so this is a free trade. Now, you can see we're continuously just chopping. We're not outside the band. At any point, you could close this trade and it would be a good trade, right? Now, what I'm looking for is I am looking for a reversal of some kind. And I really like using the money ball to close my position. So you can see, and the money ball is getting weaker, but it's never flipping. There's never enough buys to flip it. Not until here. Here is when you first see that there's enough volume coming in to flip the money ball, but it's also before we get the Q wave bear signal. Now, this is where I would like to write it to. Again, there's no problem. If you just want to write it to you get a signal on the momentum, right about there, there's no problem taking that as your profit. That's still an incredible trade from there to there. So you can't really go wrong either way. I like to trade into levels, but here we have no level that we're trading into. So this was a hard day to trade, but we're going to look at the bulls and the bear signals. One, We don't get any bulls or bear signals until later in the day. We have PMI data, definitely not trading before the PMI data. Once the PMI data came out, I personally took this short. I did, but I caught it a little bit late. I caught it like right here. So once we came down and we came back up and I was negative, I didn't like it. I was looking at all this. And once we got this green dot right here, this green dot made me extremely nervous already looking into the momentum. Once we came up here, I just went ahead and tried to exit the trade for break even. I think I took a little bit of a loss. Once we came back down, now this is important to note. Look how we have a green dot and a green dot, and one's higher than the other, and we formed a double bottom. Once you have a double bottom formed, right, and on the QuantVue momentum, if the dots are going in, say, the momentum direction, right, the double bottom, but the green dots are not perpendicular, they're offset like this is a very high probability that it's going to continue to go to the upside, which is exactly what we see. So this is a great long, and you definitely should have taken this long. Now, if you take this trade, where are you going to take this trade to? The overnight high. Boom. We take it to the overnight high, take one contract off, leave the other one on. Once we come back down and we break through the overnight high again, and we don't come back up to retest it, take the other contract off. You don't have to hold this all the way to break even. I would have just taken the other contract off. So notice how we don't have any bull or bear signals here. Why? Now, it's just simply because there's not enough volume trending in one direction to break out of the bands. This is what I don't want to trade. This is kind of another way of looking at what's called average directional index, or the ADX. Kind of functions the same way. It's not an ADX, but it's acting as one by not presenting us with trades in this area where it's just not really a trend. Going into this day is going to be before FOMC speaks, if I'm not mistaken. Yes, so FOMC speaks the next day. Here is the thing about this. One, notice that we are trading overnight inside the previous day's range. That is a sign that it's going to continue to chop unless we break out of the overnight range, which we don't really do. And we definitely don't break out of the previous day's range. This is a hard day to trade, and typically you're going to see this happen a lot days before FOMC. Doesn't mean it always happens, but it definitely happens enough to be aware of it. This is the day I'm just not trading. Notice how narrow the yellow bands are, right? So you notice how wide this yellow band is, how narrow this one is. As long as we're trading inside of this, I'm not going to trade it. But if I was to trade it, we come up to here. Where are we going to ride the Q wave bear to? We're going to ride it down to the previous yellow line. Where are we going to ride the Q wave bull to? The yellow line. Both those trades would have been winners. I personally don't like to trade chop, and this is what I consider an extremely choppy day. Going, and there's no levels either. Like, there's no levels being broken. There's no support levels. This is just an ugly looking day. So here we have unemployment, FOMC, right, on this day. Notice how we don't break out of this range until we have the unemployment rate come out. Once we have the unemployment rate come out, we finally are able to break that range. We form a bottom. That's a pretty solid low just because it's formed already outside of this range. Very likely that it's going to be respected now. So now we come up, we come down. With this, keep in mind, this is all before FOMC. I don't like to trade before FOMC unless I see something that I really, really like. We come down to the overnight high, or the overnight low. It's respected. We bounce, we come down, and we bounce again. Here is where I would take a long. Once we get this Q wave bull signal, right, off a double bottom, off the overnight low, now we can take this long. And we have confirmation on the QuantVue momentum here. Take this long. Where are we going to take our first contract to? This line. right? You could end up taking a contract off here once you got this QA bear and we kind of saw this rollover, potentially at the same level as the unemployment. You could also shave off a contract there, try to leave one on, try to run that second contract all the way up until the overnight high or past even. We have the FOMC speak and we have this breakdown. Notice how it wasn't, there's buyers and sellers coming on both sides. So there's not enough sell pressure to print a Q wave bear signal here. So I wouldn't take it. The other thing that I don't like to do is I don't like to really trade in the last 10 minutes of the trading day. I don't like to take signals near the end of the day. It's just really risky just because, market can move so much, especially in that last 5 minutes, especially in that last minute candle where I don't like to take trades, period. So I would just completely ignore this Q wave bear. So basically, I just wouldn't even trade after FOMC. But even if I was to, let's say, take a short, where am I looking to ride the short to? Here, where am I looking to put my stop? Right above this previous high. You would have taken a losing trade here, but this winning trade was massive if you would have taken it. So on this day, what are we going to be looking at? We're going to be looking at this QA bull and QA bear signals. At first glance, you're probably looking at this and be like, why would I even trade this? It doesn't even make sense. These are signals in the middle. It just looks like chop. Look at the 4-hour line. Look at the 1-hour line that I have down here. Now what do you see? Look, we've been banging up against this overnight. All overnight, we've been banging up against this 4-hour, this 4-hour, this 4-hour, this 1-hour, 4-hour, 1-hour. What happens on market open right here? We break through the 4-hour, this 4-hour level, right? And now what happens when we come back down? This ends up being on that 4-hour level. Now we have a support level. It's flipped. So this previous resistance level is now turned into support, and we see a bounce on a Q wave bull. So what are we going to do? We're going to take this Q wave bull and we're going to ride it to where? The overnight high, the yellow line. Boom. Easy, take profit. Now let's just say you took this Q wave bear for some reason. You're going to take a little bit of loss. You're going to flip it on the Q wave bull. But because this Q wave bull is here, where are we looking to take our next profit? The previous day's high, right? This BOS. This is why I have this set up. So now we see a breakup structure. This is where I'm taking my profit, moving at the break even, and we chop for the rest of the day. So why wouldn't we take the Q wave bear? Well, it's pretty simple. It's because we just broke through a 4-hour resistance level, right? Came back down, tested it, and it became support. Once a 4-hour resistance level is broken and then also becomes support, it is very unlikely that it's going to turn and rip back through that 4 level within the same trading day. So I wouldn't take that. But even if I did, as soon as we get the Q wave bull, you're going to flip it and ride it continuously going up. So I'm going to go over the rest really briefly. Notice that we don't have any Q wave bull or Q wave bear signals going into the FOMC speaks, right? Now, once FOMC speaks and you see downward momentum, we get the Q wave bear signal where we're going to ride it to the yellow line. Overnight, we have a interesting kind of chopping. We get no signals going into this FOMC. I don't know if this is data or speaking. I don't remember. But we get no bulls or bear signals. If you wanted to trade the FOMC, right? If you wanted to trade that, where are you going to trade it to? You're going to trade it to the yellow line if you wanted to, and you're going to, take one contract off, move your other contract to break even, and you could have potentially ridden that up to about here. I do not hold trades overnight, so holding this all the way up to this top line would not have been possible for me. You have CPI data that comes out overnight, and you get overnight high, overnight low. We're going right into the trading day. We break the overnight low. Now you can, if you wanted to, trade the break of a structure, right? You could trade the break of the overnight low. I don't like to do that. What I would trade though would be this Q wave bull signal. I would trade it here where we're going to trade it to. We're going to trade it to the overnight low. And then once it bounces or rejects off that overnight low, What are we going to do when we get the Q wave bear signal? That's a beautiful trade. We're going to totally trade that. Where are we going to make our first take profit? Look at the previous day. You can make the previous day low, which will be marked out in your smart money concepts. If you have that turned on with the same settings I have, this is where you will take off one, move the other one to break even. And now you're in a risk-free trade. Where are we going to take that second contract to? Moneyball 1. So as soon as we start to come back up on the side, the Moneyball turns right there. That's a perfect exit to get out. If you wanted to try to get out on a level, you could also look at previous days lows and highs, right? That have been previously marked out and respected. Here, go back to this zone right here. Wow, look at what that aligns up to. Now this one also went through, right? And you can see we kind of actually had like a little bit of a pullback right on the zone, and then it continued to rip through. Here though, we had this complete bounce and rip back up into the top or middle band. So it is something to keep an eye on. And again, this is why I mark these levels out. So with confluence of that plus the money ball flipping, definitely get out of that position there. Lastly, going into the consumer sentiment, if you want to take this trade, where you going to take that trade to, you're going to trade it all the way to the yellow line. However, it's just really a chop day and there's no bulls or bears signals printed. So personally, I would just stay away from this. It just doesn't look like a good thing to trade. Just because you can trade doesn't mean you should. But so this is a way of using a combination of Q wave, the smart money concepts, the money ball, the QuantVue momentum, and drawing lines on a 1 hour and a 4 hour, and then putting that down to a 15-minute chart and using that all in combination with each other to make the most accurate trades. So the source that I use to find out what high impact news are coming out in the market, it's called forexfactory.com. Go there, you can set up your own custom calendar for US events, and it is extremely helpful in knowing when to trade, when not to trade. The other thing is that if you want to try QuantVue out for free, there's a link down in the description below. It's completely free to try out. Go ahead and try trading YM with these settings, with these levels marked out, and you will be shocked on how profitable you can be with this setup, I think. Make sure you guys like this video, subscribe to the channel if you haven't already, and also make sure to come check us out in our Discord server. We have a great community over there, great resources for you. Not only that, some of the community members are amazing traders that use QuantVue in their own way with their own settings, and a lot of times they just share that information in our server for free. It's a great resource, great place for you to come and hang out with profitable traders. Anyways, that's it. See you guys.